Hey there, I'm Champion Trader Kevin Davey, and today I'm going to give you a mini S&P futures trading algo. Enough talk. Let's get started. So for this strategy, I'm going to trade the ES, that's the mini S&P futures, $5 commission, $25 round turn slippage. It would probably work on other stock indices. You'd have to test it. And it might work with other markets, or more likely, maybe the opposite will work because stock indices tend to act differently than other markets. It will work on the micro E-minis. You might just have to adjust the code to account for the smaller contract size. And in this test, in the testing I did for this strategy, I used multiple years of testing, but I didn't run it through my whole strategy factory process. So you'd have to do that to fully test out the strategy. And speaking of testing, it's worth pointing out that most algo traders build their strategies incorrectly. And that's something you can never overcome. If you just build strategies incorrectly, you're never going to have real-time success. You know, a lot of people will overtest, they'll use too many inputs. They create these strategies that are just too complicated, and they don't have consistency in what they're doing. Some strategies they'll test over and over and test a bunch of exits. Other strategies, they won't test anything. You've got to be consistent in what you're doing if you want consistent results coming out. Developing profitable strategies gets a lot easier when you have a proven development process and you stick to it and you are consistent with it. So remember that as you try to build your algos. Try to be consistent. But the big thing too is make sure you're consistent with the right kind of process. If you have a garbage development process, guess what? You're going to develop garbage. So you got to watch out for that. So let's take a look at this strategy. I call it a two momentum strategy. To enter short, I'm looking for one momentum to be negative, the other to be positive, and then I'm looking for the high to be greater than the high of the previous bar. Exactly opposite to go long. And so you can see the code here in TradeStation, easy language format. It should be pretty readable for you. You know, and when it says close less than the close of input variable 1, so that's the close that many bars ago, that is a momentum calculation. So it's basically saying if the close minus the close so many bars ago is less than 0, you know, that's what you're looking for. It has a stop loss of $1,500, which is 30 points in the mini S&P. So you'd have to change that for the micro E-mini. And it has a profit target of $5,000, and it'll enter that order on the next bar. So it calculates that open position profit every bar with a TradeStation reserved word. So that's the code. Pretty simple. Here's what it looks like through the end of 2021. Pretty decent. There are some significant drawdowns, but just about every strategy has drawdowns. People who look for no drawdowns usually get into trouble of some sort. So, and usually that's by over-optimizing. So expect drawdowns in just about every strategy. Here's some sample trades. And you can see it hits the stop loss on occasion. Also gets some nice trades, longer term trades, that it'll stay in the market over multiple days if it's going in your direction. Here's recent performance. So I tested it through the end of 2021. So here's 2022, 23, and part of 24. And in the blue, And you can see it's still performing pretty well and pretty much the same. It goes up, then it has a significant drawdown, goes up, has a significant drawdown, and that's kind of what it's had in the past. So that's kind of nice to see. It hasn't really changed its character outside of the test period. So you notice here I had a reward to risk of $1,500 for the stop, $5,000 for the profit. And, I always hear people say, hey, you need 2-to-1 reward to risk, 3-to-1, 1-to-1. And, they throw out these numbers. The reality is any of those numbers can work. You have to know the winning percentage. If you don't know the winning percentage, saying I need a reward to risk of 5 doesn't really mean anything. I'll show you what I mean here. Here's a chart of reward to risk on the y-axis, so over here, and the winning percentage along the x-axis. And the curve here, the red curve, is actually just your break-even point. And you can do the math and figure this out. It's not too complicated. But if you're on the left side of that curve, guess what? Your strategy is going to be unprofitable. If you're on the right side, you're going to be profitable. And I've put some sample strategies of my own there just so you can see where strategies lie. And notice what you don't see here. You don't see 90% winning strategy with a 4.5 reward to risk, which would be way out here. A lot of people claim they have those. Maybe over a few trades you could do that, but over a long period of time, I'm talking years of testing, those things just don't exist. You're probably going to be somewhere near that break-even line where, as long as you're to the profitable side, you'll still be okay. So you might say, why do you do multiple strategies? Well, hey, it's diversification. I didn't come up with this. Harry Markowitz, he won a Nobel Prize in 1990. He developed it way before that. With futures, you can do a whole bunch of different market sectors, which is really nice. Here's an example of diversification in action. These are strategies I give out in my course. And you can see the bottom kind of spaghetti, colored spaghetti, those are the individual strategies. And yeah, they make money, but none is like perfect looking. But you add them together and they kind of balance each other out because their max drawdowns are going to happen at different times. And one will be doing good and the other will be flat. And they add up and they give you that green line. That's pretty neat. That's why you diversify. Of course, I only did a little bit of testing here. More testing is required. These are all tests that I do as part of my strategy development. I think you should too. Speaking of my process, these are the steps I use, and a lot of those tests are embedded in those steps. So, again, I have a process. I'm consistent with it, and I think that is a key to getting consistent results when you're actually trading. So, that's it. I hope you enjoyed this strategy. Give it a try. Try it on some different markets. Let me know what you find out. Leave a comment. Hit subscribe and like. I'll keep making more. I'm Champion Trader Kevin Davey. Have a great day.